Good afternoon, everyone. This is James coming to you from Sarasota, Florida, where it's warm and sunny all the time. Here at the 10-Minute Trader, Dividend Stock Talk, we invest in dividend stocks for monthly cash flow. It is 2:30 p.m. on Thursday, May 25th. Options expire tomorrow afternoon, or I should say weekly options expire tomorrow afternoon. As you can see, tomorrow is the 26th, which is the fourth, fourth Friday of the month. So monthly options expired last week. This week we have weekly options expire, and we have quite a bit to go over. So let's jump on in, take a look at what we've done this week and what we're going to look at for next week. All right, so let's get out of here and jump on over to our Thinkorswim. This is what shows up when you first log into Thinkorswim. Click on this, let X get out of there. And quickly going to the monitor section, this is where our positions are. We have HAL, which is Halliburton, IP, which is International Paper, KSS, which is Coles Corporation, LUV, which is Southwest Airlines. Come on, Southwest Airlines. How do you get LUV for a stock symbol with Southwest Airlines? MGM, which is MGM Resorts International. I have no idea what that is. NEM, Newmont Mining Corporation. Okay, some of these companies I know of, some of them I don't. So why did we invest in them? I'll tell you why. I've been investing for over 20 years. I've created a couple pieces of software that tells me what's going to happen next, or hypothetically what's going to happen next based on historical performance of dividend stocks and how they react to the dividend coming up. Now, all these companies here have a dividend coming up in the next week or the next 2 weeks. And historically, our software shows that the stock has a tendency to move up just before the dividend date. So we invest in this account here in weekly options to get a nice little return on our money. So let me just briefly explain to you where we are, how we got there, and what we're going to do today. Because today we're going to do one trade because we can. That's it. It expires tomorrow because tomorrow's Friday. So let's see if we can make any money overnight. All right. First thing we're going to look at is HAL, or Halliburton, and Halliburton is a a defense contractor. They make the weapons that do whatever. Who knows? All right. Halliburton started out the year in trading range of between 41 and 46. She traded for 5-6 months, and she jumped on up to a 48 area. Traded about 2 months at 48 area. Right after the election, she jumps on up 54. She makes a high of 58, and then slowly declined. What is that? February. So in February, she slowly declined to hit a low in May of 44, and now she's at the 45 area. Look what happened today. She opened up at 47.59, and she bottomed out at 45.62. Why is that? So let's see where we stand with Halliburton. View the trades for Halliburton. We got the 46 and a half spread. Okay, so we're only going to make money if it's above 46 and a half. Okay, our break even is probably going to be 46.30, 46.40, somewhere in that area. That's our break even. And right now she's at 45.64. So this one looks like a losing position, and it's only $1,100, so we might be out $1,100 on this one. But we got 50 contracts. Now I can't do this one. I can't buy 5,000 shares of Halliburton because I'm already committed to 5,000 shares of International Paper. See right here? I got a lot of my money tied up in International Paper. But we're going to do that one next. But Halliburton, as you can see, she's going to go above 46 and a half. 46 and a half is right there. It's a good idea. It might be able to. Maybe they got some bad news overnight. I don't know. So maybe she might open up and close higher than 46 and a half tomorrow. I hope so. All right, so that's Halliburton. Nothing we can do about it today. Well, let's jump on up and take a look at International Paper. Now, International Paper, 2 weeks ago, now they have a dividend coming up next week. I usually like to be out before the dividend comes out. So what happened with international paper? 2 weeks ago, we tried to do the, what was it? I can't see squat. All right, well, first let's go where international paper is. Okay, so IP starts out the year in the, what is that, 44 to 40 to 44 range. It travels about 2 months in that little trading range. Slowly moves up to 48, trades a few months in that area, drops back down to 43, jumps on up. Oh, what's that, right on election time? Yeah, look at that. Right around election time, she goes from 44 to 53, 54, somewhere in that area. It's like a $10 move. It's a 25% move within a couple of weeks, just because there's a new president. Now, international paper, why would that be? I have no idea. They make paper. What does the new president have to do with paper? Anyway, so she trades in a range of, what was that, 54 to 51 to 54 for a few months. Hits the high of the year at 58. And right now, she's at 52.05. So what did we do? We, 2 weeks ago, we decided to do a 51.5, 52 spread. We ended up having to buy 5,000 shares of international paper because it didn't go quite the way we wanted to. Don't get me wrong, we did make a little bit of money off international paper the first week we had it. However, the second week, well, at the end of the first week, she closed right under 52. So, or was it 52 and a half? Anyway, we ended up, on week number 2, we ended up buying it, and we owned it at 52. Let's open up international paper. Okay. 513, which was Saturday, we ended up buying it at 52 because they do close on Saturday. That's when options close. Okay, so 513, we ended up buying 5,000 shares of international paper at 52. So what happened last week? Last week, the stock opened up at 53. So what we did is we turned and we sold the 53 call for someone to buy international paper from us at 53. And we made $2,100 last week just for that option. Okay, what happened on Friday? On Friday, the stock closed below 53. So lo and behold, this Monday, we still own it at 52. Okay, right now she's at 52.06. Now yesterday, she made a high of 52.45. And what we did was we sold the 52.50s for, it was like 26 cents. All right, and we brought in another $1,100. Okay, now we own the stock at 52, but we sold the 52.5 spread for 26 bucks. That's still 26 cents. For 26 cents a share, which is like $2,100, something like that. Oh, 1,200 bucks, somewhere around there. Anyway, so if the stock goes above 52.5 by Friday, by the end of business on Friday, we would end up selling the stock at 52.5, and we do collect the additional 26 cents that we sold the option for. But at this moment in time, it's 52.08, and we really want to be out of this thing by next week. So I want to get out of this thing by Friday or first thing Monday morning, get rid of it. That way, if we have to buy Halliburton, anyway, I'd like to get out of this thing by Friday afternoon. So if we do have to get Halliburton, we won't lose our position there. But it's only, it's only $1,200. Not a big deal. Okay, so that's where we are with international paper. Okay, the first week we bought this call spread, the 52, 52.5 call spread, and we made about $1,100, $1,200 the first week we had it. Second week we had it, we made $2,100 for selling the 53 call. Okay, so someone would buy it from us at 53. However, last Friday she dipped below 53. We ended up carrying it into this week. We still own it at 52. Now we're giving someone else the option to buy it from us at 52.5. Okay, so we're still making money on this thing, and it's still less than we paid for it. No, it's still more than what we paid for it. Anyway, we're good on international paper. Okay, KSS. What is KSS? Kohl's Corporation. Aren't they like a clothing store or something like that? KSS. Kohl's Corporation. Now, Kohl's starts out the year right around 36. She trades for a few months at 36, jumps up, trades for a few months at 39, jumps up, trades for a bunch of months at 44. Right on election time, she jumps from 43 up to 54, which is another 25% increase. Okay, she trades for a few months up here, hits a high at 59.50, drops back down, big gap here. Okay, she gaps down from 50 all the way back down to 42. Okay, trades for a few months, and we are 38.90 for Kohl's. So where are we in our position? Our position is 37.5, 38. She's at 38.90. No brainer. 50 contracts. Good to go. So we're good on the money with KSS. All right. Love. LUV. Okay. The airline starts out at 42, goes sideways for a bit, comes down to make a low of 35. She trades for a few months at 35. And right here toward at the election, she goes from $40, hits a trading range of 50, which is a 25% increase. Another month or so, she goes up to 59, which is almost a 60, which makes it almost a 20% increase. Oh my goodness. Wait a minute, 25, almost a 50% increase. Almost. Between where we had the low of 36 and now we're up to 58. Yeah, that's almost a 50% increase, or maybe more. Who knows? She's been trading in a very strange range of between 52 and 60, where she is now. And we just so happen to have the airline at 58.5, 59. She's way into the money there. Thank you very much. So that one we got, how many contracts? Only 20 contracts. Okay, so we're up about $2,000. Okay, Southwest Airlines. Okay, MGM is next. MGM starts out the year at 22, goes sideways for a few months in the trading range of, what is that, the low of the year of 21 and 25. So it trades between 21 and 25 for about 4 months. She shoots on up to around 26, right around election. From election time, she jumps on up to a trading range of 28, 29, goes sideways for a few months, drops down, hits 26 for a few months, and for some strange reason, she jumps up to the $31 area, the $30 trading range. I got a couple of weeks there. And MGM, we got into this trade, the 31 and a half call. And right now, she's at 31.61. So as long as she stays above 31.50, that's basically money. That's lovely. And it's only up $84. Wow, that's not a whole heck of a lot. We only have 30 contracts. Okay, 30 contracts it is. But MGM looks good, so we're going to stay there. NEM's the last one on our list. That's my Wizard of Oz trade. NEM. Anyway, sorry, bad joke. Okay, so here we are looking at NEM. She starts out the year at 31, almost at 32. And over the next few months, she shoots on up to make the high of the year at 45.90, which, she trades there for about a week or two. Okay, from there she slowly trickles down, spends a couple of months in the 39.72 area, 39.22 area, drops down to 35, trades a couple of months there, drops down to 32, trades a couple of months there, jumps back up. She's like all over the place. So right now she's trading in the trading range of 32, 33 area. And that's where she is now. She's at 33.31. And what do we have? We have the 33.50. So we kind of have to keep our eye tight on this one, because if she goes below 33.50, then we have to figure out whether we want to buy it or whether we want it to let it go. But you know how I hate losing money, and there's a possibility for me to buy it and then jump in and hold on to it, then fine, that's what I'm going to do. But at this moment in time, there's only a few of them we need to keep our eye on. NEM and Halliburton. Those are the only two that are a little on the low side. Okay, with that being said, let's go take a look at our other trading account and see what we're doing there. Okay, now this one, I don't want you to panic because it's in the negative. I mean, we started out the year, both of them at $100,000, and this one is $5,000 in the hole. Okay, now a couple of weeks ago, we were at $19,000 in the green, or in the black, whatever you gonna call it. We're at $19,000 profit. Right now, we're at negative $5,000. However, it's not really negative 5,000 because we're not selling at a loss. If I sold something at a loss, then it would be a loss. It's not there yet. What we have BMO. Let's look at them one at a time. BMO, which is Bank of Montreal. Now, we've had Bank of Montreal for quite a while. Let's check it out. Bank of Montreal trades in trading range of between 62 and 66, and she's traded this way for like 7 months. Now, right around election time, right here, she goes from 63 all the way up to 75, which is a $10, $12 move. She trades for a few months up here, and then that's where we got it. We got it way up here around 74, and she sunk all the way down to 67, which is where she is at now. Now, we collected the dividends on Bank of Montreal. All right, let's take a look at our trades. Okay, we got Bank of Montreal on April 12th. We collected the dividends at the end of April. Granted, it's not a whole heck of a lot of money. It's like $350, somewhere in that area. But profit's profit. Now, Bank of Montreal did sink. And now let's see quickly where we think Bank of BMO is going to go. We're going to click on the style icon. This drop-down box opens up. We're going to come down to chart mode where it says standard. We're going to change it to seasonality. Okay. Now, here's where we are right now. This is the current reading right here. And this is 10 years worth of data. It's 1 year on top of another, This is where we are, and this is where we were when we bought it. Okay, we bought it right about there. We wanted to hit the peak, and we wanted to get out. But guess what? The peak came and went, and it didn't do what it did historically. We ended up owning it. Now it paid out its dividend here. Now she's slowly matriculating down. Eventually, we're going to end up selling off some options against it to try to recoup some of our loss. And then she's slowly going to move up throughout the year. So we might end up holding on to this for a while and continuing to collect the dividend every 90 days. That's where we are with BMO. So let's get out of here, the style, back to the standard, and let's look at who's next on the list. And next on the list is we have DFS. Discover Financial Services. Okay, DFS. They start the year trading between 51 and 57. She goes for about 6 or 7 months in that range, and then right around election time, she jumps from 56 all the way up to 70 area. She trades in the $70 area for another 5-6 months, and then right around the end of April 25th to be exact, slow decline down to where she is today. Okay, so DFS, we still haven't caught in the dividends on this one. We got 800 shares. We ended up buying it at 67.16. Let's open that up. Now we should be collecting our dividends any day on that one. I mean, I should get credit to our account already. I mean, it's been a month. My goodness. Okay, so we're down $6,000 in DFS. Now, do we hold on to DFS? Sure. There's no reason to sell it. I mean, it's a good, solid, quality company. It has its ups and downs. As a matter of fact, let's quickly review it so you can see. Oops. Didn't mean to do that. Okay. Yeah, see how she's like all over the place? Now she starts out the... Okay, anyway, she's all over... DFS is all over the place. And we're not getting rid of it. We're going to hold it until we collect the next dividend. Now, Macy's is the champion of losers. this month. Now, Macy starts the year in the $33 area. She trades for a few months there, gaps up, hits high of 40, travels in this direction for a couple months. Right around election time, she goes from 37, hits a high of 45, which is a little bit less than $10. Then from there, it's nothing but down. And there's a big gap from January. Why would that happen? Right after the Macy's parade? Look at that. The Macy's Day Parade, 2 days later, she takes a drop from 35 down to 30. That's a 10% drop. And she trades in that range for about 6 months. And then she drops again. May 11th. She drops from 29 to 23. Why is that? And is it going to move back up? So we got 1,621 shares there. So that's like $18,000 of money tied up. And we've lost $15,000. Paper trade. Paper. Because it's not a loss until you actually take it. Okay? Not a loss until you take it. Now, Macy's been around for over 100 years. They're not going anywhere anytime soon. And next week, we should be collecting another dividend from Macy's. Because we got Macy's back in February. So February, you have March, April, May, June. So that's next month. We should be collecting another dividend. Okay, fine. So I'm going to hold to collect another dividend, wait for it to get back to our target price. Our target price is $33.10. She's at 23, so we have to make it go up 10%, which is $33.10. It's right about there. All right, she can do it. All right, it's Macy's after all. Don't panic. You're not selling it. You're investing for cash flow. So every 90 days, we're collecting money from Macy's. Every 90 days, we're collecting money from Bank of Montreal. Every 90 days, collecting money from DFS, so on and so forth. So let's take a quick look at MGM. MGM, which is MGM Resort International. They start the year out at 22, quickly jump up to 25, drop back down for the low of the year at 21. From there, it's nothing but up right until the beginning of December. In December, she jumped in that trading range of 28 to 30. And she trades for about 4 or 5 months in that $29 area. Takes a hit and trades 26 for a couple of months. And then from there, she goes from 26 to 31 and trades sideways for the past month in the $31 area. So that's where we are now. We're at 31 with MGM, and see what position we got. Let's view the trade. We got MGM at 31.70. Our target on MGM is 32.50. Okay, now we bought this on the 22nd. That was only 3 days ago, so that's not a big deal. SKT is the last one we're going to look at. SKT starts out the year 35, quickly jumps up to the $41 area, trades for 3 months, and that area slowly drops down. She finds another bottom, another support at 33, trades for about 6 months in the 33 area, drops down to 32, trades for a couple months there. Now, for some strange reason, continual drop all the way down to the low of the year of 24.71. Now she's up to 26.63, and SKT, where are you? SKT right here. We're looking at an exit price of 32.90. Either way she is now, 32.90 is way up here. That's a long way to go. We ain't gonna see that anytime soon, so we'll probably end up collecting the dividends there. So in short, we have 1, 2, 3, 4, 5 positions. 5 positions, which means we get 5 checks every 90 days. So 5 checks every 90 days. How much is that for the whole year? That is 20 checks, 20 dividend checks for the whole year. Okay, not the greatest in the world, but it's not that bad. You're continually collecting the dividend, which is nice. And then we will see what happens from there. Okay, that's basically it for now. This is James signing out from Dividend Stock Talk, and we will catch you on the next episode, which should be tomorrow right around 3 o'clock, 4 o'clock, to find out what we're going to do about those positions. This is James signing out. Have a great day.